Breaking news just dropped from Washington, and if you're a senior citizen, a retiree, or someone living on a fixed income, you need to stop what you're doing and listen to this very carefully. Because what the IRS just announced could directly impact your tax return, your retirement savings, your social security benefits, and even the money sitting in your bank account right now. And most people have absolutely no idea this is happening. The Internal Revenue Service has just released updated tax rules specifically targeting firearm businesses. And you might be thinking to yourself, well, I don't own a gun shop, so why should I care? The IRS has updated its guidance on how firearm businesses must report their income, handle excise taxes under the National Firearms Act, and comply with new documentation standards for certain transactions. For firearm dealers, manufacturers, and importers, this means stricter record keeping, more detailed reporting of sales and transfers, and potentially higher tax liabilities if they fail to meet these new standards. But here's where it gets personal for retirees and seniors. If you own firearms as part of your personal collection, if you've ever considered selling a firearm to supplement your retirement income, or if you're planning to include firearms in your estate planning, these new rules change the game entirely. The enhanced reporting requirements mean that transactions that might have flown under the radar before are now much more visible to federal authorities. And the IRS is coordinating more closely than ever with the Bureau of Alcohol, Tobacco, Firearms and Explosives, known as the ATF, to cross-reference data and identify discrepancies. Imagine you're a retiree named Robert. You're 72 years old, you've got a modest pension, social security coming in every month, and you've got a few firearms that you've collected over the years, some from your father, some you purchased decades ago. Robert decides to sell 2 of his rifles to a local dealer to help cover some unexpected medical expenses, which is a situation many seniors find themselves in. Under the old rules, this might have been a simple transaction with minimal documentation. But under the new IRS updates, that dealer now faces stricter reporting requirements for that purchase, which means Robert's sale is documented in much greater detail. The payment method is scrutinized more carefully. And if Robert doesn't properly report that income on his tax return, the chances of the IRS flagging it have increased dramatically. And here's something most people don't realize. If you're selling firearms privately, even to someone you know, depending on your state laws and the value of the transaction, you could now be facing requirements that didn't exist before. And failing to meet them could result in penalties that eat away at your retirement savings. I'm going to reveal it in just a moment, but first, if you're finding this information valuable, if you want to stay ahead of these government changes that could affect your retirement, your taxes, and your financial security, please take a second right now to hit that like button and subscribe to this channel, because we break down complex federal updates into plain English that actually makes sense for real people living on fixed incomes, and you don't want to miss what's coming next. We cover social security changes, Medicare updates, tax law shifts, and banking regulations that the mainstream media glosses over. And our community of informed seniors is growing every day because people are tired of being caught off guard by government announcements that seem to come out of nowhere. So hit that thumbs up, smash that subscribe button, and turn on notifications so you're always the first to know when something important happens. The new IRS rules for firearm businesses include updated provisions regarding the payment of the federal excise tax on firearms and ammunition, which is currently set at 10% for handguns and 11% for other firearms and ammunition. While this tax is typically paid by manufacturers and importers, the compliance costs and documentation burdens are being passed down through the supply chain, which means higher prices for consumers. And if you're a senior on a fixed income who owns firearms or is considering purchasing them, your dollars aren't going as far as they used to. But more importantly, and this is what keeps me up at night thinking about our retired community, the IRS has clarified that certain activities that seniors might engage in, such as occasional sales from personal collections, could potentially trigger business classification if they occur with enough frequency or volume. It means that if you sell more than a couple of firearms in a year, if you trade firearms regularly, if you attend gun shows and sell or trade repeatedly, the IRS could determine that you're engaged in the business of dealing in firearms. And that classification brings a whole host of tax obligations, licensing requirements, and potential penalties that most retirees are completely unprepared to handle. If you have an individual retirement account, a 401k, or other retirement savings vehicles, and you're thinking about using some of those funds to invest in firearms, whether as a collectible asset or through a business venture, you need to understand that the IRS has very strict rules about what can and cannot be held in these accounts. Collectible firearms, depending on how they're structured and held, can sometimes run afoul of prohibited transaction rules. And the new guidance for firearm businesses has clarified, or in some cases tightened, how the IRS views these arrangements. If you're a retiree who has rolled over retirement funds into what you thought was a legitimate investment vehicle involving firearms, and that vehicle is now being scrutinised under these updated rules, you could face immediate taxation of your entire retirement account, plus penalties if you're under 59 and a half, plus interest, and suddenly your nest egg that was supposed to last you through your golden years is cut in half or worse. I've seen this happen to good, honest, hard-working people who simply didn't understand the rules, and the IRS is not sympathetic to "I didn't know" as an excuse. The penalties for prohibited transactions in retirement accounts are among the harshest in the entire tax code, and these new firearm business rules are shining a spotlight on arrangements that might have escaped notice before. Now let's discuss Social Security, because I know that's what many of you are most concerned about, and rightfully so. While the new IRS rules for firearm businesses don't directly change Social Security benefit calculations, they create a tax environment that can absolutely affect how much of your benefit is taxed and what other income counts against you. If you are classified as being in the business of dealing firearms, even inadvertently, that income counts as earned income, which can affect not only your income tax bracket, but also how much of your Social Security is subject to taxation. For seniors who are carefully managing their income to stay below the thresholds where Social Security benefits become taxable, currently $25,000 for individuals and $32,000 for married couples filing jointly, an unexpected business classification could push you over those thresholds and result in thousands of dollars in additional taxes that you never anticipated. And let's not forget about Medicare premiums, which are income-based. If your modified, adjusted gross income goes up because of unexpected business income from firearm sales, your Medicare Part B and Part D premiums could increase as well, creating a double hit to your fixed income that makes it even harder to make ends meet. The qualification requirements under these new rules are also something every senior needs to understand, because they're more complex than they appear on the surface. To legally engage in the business of dealing firearms, you need a federal firearms license from the ATF, but the IRS is now requiring more detailed documentation of who holds these licenses, what their tax identification numbers are, and how they report their income. For seniors who might be helping a family member with a firearm business, who might be listed on paperwork or financial accounts associated with such a business, or who might be co-signers on loans or leases, this increased documentation means increased exposure, or if the business fails to pay its taxes, if there are discrepancies in reporting, if the IRS determines that income was hidden or underreported, anyone associated with that business could face scrutiny, and seniors who have put their names on documents to help children or grandchildren could find themselves caught in a web they never intended to enter. The look-back period for the IRS to examine these records has also been effectively extended in practice, because the new rules require businesses to maintain records for longer periods and in more detail, which means if you're associated with a firearm business in any way, your financial history could be examined going back much further than the typical 3-year statute of limitations. Deadlines are another critical piece of this puzzle, and they're approaching faster than most people realise. The new reporting requirements for firearm businesses take effect for the current tax year, which means businesses need to be compliant now, and individuals need to be aware of how these changes affect any transactions they're involved in. Quarterly estimated tax payments for businesses have been affected by the new guidance, because the IRS has clarified that certain types of firearm-related income need to be recognised and paid on different schedules than previously thought. If you're a senior who has any firearm-related income, whether from sales, rentals, or other arrangements, and you're not making quarterly estimated payments because you didn't think you needed to, you could be facing underpayment penalties that compound daily. The deadline for amending previous returns, if you discover that you should have reported income differently under these new interpretations, is also limited. And if you wait too long to correct past mistakes, you could lose the ability to fix them without facing the harshest penalties. The IRS has indicated that while they will exercise some discretion during this transition period, that discretion is not unlimited, and seniors who take a wait-and-see approach are taking a significant risk with their financial future. Common mistakes that seniors make in this area are heartbreaking because they're so avoidable, yet I see them over and over again. The first mistake is assuming that because you're not a dealer, the rules don't apply to you. Under the new guidance, the definition of engaging in business has been broadened in interpretation, and activities that seniors might consider casual or occasional could cross the line. The second mistake is failing to keep proper records of firearm acquisitions and dispositions. If you inherited firearms, if you received them as gifts, if you purchased them decades ago, and don't have receipts, you need to document everything now, because if the IRS ever questions a transaction, the burden of proof is on you to show where that firearm came from and what basis you have in it for tax purposes. Without records, the IRS can assign a basis of 0, which means the entire sale price is taxable gain. And for a senior selling a valuable collection, that could mean tens of thousands of dollars in unexpected tax liability. The third mistake is mixing personal and business finances. If you have any involvement in a firearm-related business, no matter how small, you need separate bank accounts, separate credit cards, and separate record-keeping systems. Commingling funds is one of the fastest ways to pierce the veil of any business structure and expose personal assets, including your home, your savings, and yes, your social security income in some circumstances, to IRS collection actions. Take action today. Review your situation, consult with professionals, get your paperwork in order, and make sure you're not caught off guard by changes that are happening, whether you're paying attention or not. Your retirement, your savings, your peace of mind, and your legacy are too important to leave to chance. Share this video with every senior, every retiree, every veteran, and every gun owner you know. Because information is power, and in the face of an ever more complex tax code, knowledge is the only weapon that can truly protect your financial future. Stay informed, stay vigilant, and remember that in America, your rights come with responsibilities, and meeting those responsibilities starts with understanding the rules that govern your life. Thank you for watching. Thank you for caring enough to educate yourself, and I will see you in the next video where we continue to fight for your financial security and your peace of mind in these uncertain times.